What is up, people? Miles here with Keep the Change, and today we are talking about mistakes that new investors make in the stock market when they're just beginning. Now, obviously, I've made these mistakes. Everyone's probably made them at some point or another, so I'm not judging anyone. I'm just here to help. The very first mistake that I see newer investors make is they get super excited about putting money in the market. You know, they put a couple hundred or maybe a couple thousand into a stock, and it's not going too great, right? It goes down like 10%. Then they start to question their entire existence. Like, is this stock good? Am I actually a good investor? Why does nobody love me? And then they hit the panic button. They hit the sell button. I have fallen victim to this myself. I remember being in high school and I had 4 shares of Amazon, which at the time was like a crazy amount of money to me. And their earnings came out, right? And it went down 5%. And I remember looking at the stock and I was like, wow, I gotta get out of this. This is bad. I knew Amazon was overvalued. I knew it, okay? I gotta sell right this instant. So I sold my 4 shares of Amazon for $700 each. Amazon today is worth $3,000. So next time you're thinking about panic selling just because you have a stock that went down 5 or 10 or maybe 15%, just think about that for a second. The point is, in the stock market, there's going to be fluctuations quite literally every day you look at the market. I mean, stock prices move like crazy all the time, and you just have to get used to it. You can't get so caught up on the short term. Because if you bought a company that is genuinely a good company, there's no reason to panic. The share price will reflect that eventually. So don't panic, don't worry. The next biggest mistake that I see newer investors make in the stock market is chasing penny stocks and trying to find a new hot penny stock that will double their money quickly. There's a ton of rationale for this in a newer investor's mind. They're like, hey, if I buy a penny stock, it's super likely to go up like 100% in a day, right? Compared to like Microsoft. And admittedly, they are right. A penny stock has way higher of a chance to go up like 100% in a day than Microsoft stock. But on the flip side, it's also got way bigger of a chance to go to zero, to go bankrupt, to lose 100% in a day. Because these are penny stocks for a reason. These are generally bad businesses that are on the brink of bankruptcy or about to fail, or just not good companies at all, just scams. That's not to say that every penny stock will do terrible and every penny stock's gonna plummet and die and burn and crash into the ground. But for every one winner, there's probably thousands of losers. So trying to find that needle in the haystack is practically impossible. And if you buy a penny stock, the chances of it going to zero are way more likely than it doubling. Another thing I see beginners tend to struggle with is when they find out about dividend stocks and they just think, hey man, I gotta go and find a dividend stock with a good dividend yield. That's all there is to it, right? This stock right here, it's got a 10% yield, must be good. If a company has a 10 to 15% yield, that's actually usually a worse sign rather than a good sign, because chances are they're gonna cut it because it's just not sustainable, or even worse, they're gonna just get rid of it completely because they flat out can't afford it. The other thing to keep in mind when it comes to dividends and dividend stocks is that the dividend actually comes out of the share price. So it's not like you just get a dividend and the shares are the same. So if you had a $10 stock and it pays you a $1 dividend, you would get that $1 dividend, but now the stock is worth $9. So at the end of the day, it's like you had the same amount of money. A very important metric to look at for dividend paying stocks is the payout ratio. That basically just tells you how viable, how feasible it is for this company to keep paying that dividend. If the payout ratio is more than 100%, you need to run for the hills, okay? They're gonna cut that dividend immediately, no questions asked. Now, by far the biggest mistake that newer investors make, and this is the most important one, so pay attention. If you take one thing from this video, take this, is looking to other people for investment advice and just generally being unsure of their investments or themselves. I think the best quality that an investor can have is having conviction, okay? Believing in yourself and your positions and not listening to a bunch of noise outside, because at the end of the day, you're going to hear a lot of opinions. Certain people will look at a stock and say it's a great buy, and other people are going to say this is a terrible stock, you should stay away from it, and you're going to have to decipher between the two. You're going to have to filter out the noise. And if your opinion constantly changes from what other people are saying about this stock or this company, you're not going to go that far. You're not going to have conviction. You're going to get scared when people tell you to not buy a stock. You're going to buy in when everybody's super hyped about a stock. You're just going to fall into these pitfalls. Now, I'm not saying it's bad to have influence from other people's opinions or even be open-minded to new ideas about a stock or a business, but what matters most is what you think about the business and your own due diligence. As a real-life example of this, last year in 2019, back when Tesla was around $250, I remember texting my dad and I was like, I think I'm gonna buy some Tesla. And he texted me back, that's probably not the best idea. They're going through a lot of stuff right now. All the news at the time for Tesla was extremely negative, and I decided not to do it. Obviously, that was a a big mistake. I didn't have enough conviction in my own thoughts. I listened to other people around me, and that actually led me to missing out on making gains or making money. With the stock market, it seems to be either hot or cold in terms of the fact that people are super hyped about a company, they love it, they get it overvalued, or they either hate a company and they completely just don't want anything to do with it. And your job as an investor is to not see things so black and white, but rather in colors, okay? You should sift through the nonsense, sift through all the talking, all the conversation, and see what's really happening with the business and in turn the stock. Don't always listen to what the media says or what someone else thinks. People have agendas. You don't know why they say the things they do. You got to trust yourself a little bit more than everyone else. Now find a good balance. Don't get overly cocky, but hey, it's your portfolio, so obviously you should be the captain of the ship here. Those were just some mistakes that I've made in the stock market. I've seen a lot of other people make, so hopefully this video helped you, was educational, was fun and entertaining. And yeah, thank you guys so much for watching. Hope you enjoyed. I hope you learned something from this, and I love you.